As the saying goes, what goes up must come down. That is the rule of investing. There's always the possibility of a market slump, or worse, hanging in the distance, which means investors must be astute when it comes to timing their purchases and sales. In fact, cryptocurrency is a lot more volatile asset than traditional stocks, making it much more illustrative of the adage. There is also worried talk about crypto winter 2022. When it comes to the long-term viability of digital assets, the possibility of the cryptocurrency Black Tuesday is something that comes up frequently. Is it possible that we are on the verge of such a market crash? There are a variety of things at play right now that bears will use to argue in favor of their position. Hey, everyone. Welcome to Entrepreneurship Academy. In today's video, we are going to talk about the crypto winter 2022. So without further ado, let's get into it. Investors fear crypto winter is coming. Others, though, fear that the worst is yet to come for cryptocurrency investors, despite the precipitous decline in Bitcoin and other digital currencies in recent weeks. Despite being the most valuable virtual currency in the world, Bitcoin briefly dipped below $33,500 on the 24th of January, reaching its lowest point since July. It has since recovered to levels above $36,000, but it is still down nearly 45% from a record high of nearly $69,000 reached last November. Meanwhile, the entire cryptocurrency market has seen its value plummet by more than $1 trillion since Bitcoin's all-time high, as top tokens such as Ether and Solana have fallen precipitously in tandem with the world's most valuable digital currency. Ether's value has more than halved since its peak in November, while the value of Solana has plummeted by 65% from its apex. Some cryptocurrency investors are concerned about the possibility of a crypto winter, a term that refers to large bear markets that have occurred in the history of the embryonic digital currency system. The most recent instance of this occurred in late 2017 and early 2018, when Bitcoin plunged by as much as 80% from all-time highs, causing widespread panic. David Marcus, a former head of cryptocurrency at Meta, a subsidiary of Facebook, appears to acknowledge that a crypto winter has already begun. It is during crypto winters that the best entrepreneurs establish the finest enterprises, he wrote in a tweet on Monday. Instead of pushing tokens into the system, now is the time to concentrate on solving genuine problems. A repeat of 2018. From the end of 2017 to the end of the following year, Bitcoin's price plummeted by more than 80%, reaching as low as $3,100. This was a period marked by the boom and bust of initial coin offerings, ICOs, as well as the cancellation of cryptocurrency trading desk plans by several major financial institutions. After the world's largest cryptocurrency fell by 45% from its most all-time high of about $69,000 in November, investors are fearful that a duplicate of last year's event is about to unfold now. The crypto world has lost more than $1 trillion in market capitalization as investors become increasingly certain that the Federal Reserve will begin to tighten the ultra-accommodative policy settings that drove the recent boom in risk assets would be reversed. The retreat has affected all sectors of the cryptocurrency ecosystem, from Bitcoin to meme coins and publicly traded crypto exchanges, among others. While the collapse has been a source of concern in and of itself, according to UBS, it has sparked even greater anxiety that the agony will last for many months. Winter is coming. In a phone interview, James Malcolm, head of foreign exchange research at UBS, explained, "There's this question of how do we characterize that, and the closest analogy is probably 2018, which is this idea of a crypto winter. It appears to be a difficult and perhaps lengthy phase, which lends credence to the analogy of a crypto winter that is extremely appropriate. It's important to remember that the crypto winter of 2018 lasted longer than only the winter months in the Northern Hemisphere. So, in essence, it continued for an entire year, resulting in a crypto winter that lasted for almost an entire year." The terms crypto winter and crypto ice age have been bandied about on social media in the wake of the recent decline. User at MIRBTC tweeted over the weekend, wishing everyone a happy Bitcoin winter. There's a distinct chill in the air, according to Anthony Trenchev, co-founder and managing partner of Nexo Capital. His two-part crypto winter definition is already being fulfilled, with Bitcoin having already met half of the criteria, a precipitous decrease in price. "I'm not looking for a repeat of the previous crypto winter," he stated emphatically. "There are undoubtedly regulatory and macro storms ahead, and another leg down to $28,000 to $30,000 can't be ruled out in the current risk-off environment." Crypto ice age? In contrast to the winter of 3 years ago, investment in the cryptosphere has remained strong, at least for the time being. The crypto exchange FTX announced the formation of a $2 billion venture fund to target Web3 prospects in January alone, and the Financial Times reported that Andreessen Horowitz is seeking to raise $4.5 billion for cryptocurrency funds. It is true that a prolonged downturn might dampen investor interest in the sector. Companies are also looking to grow into new areas of the cryptocurrency ecosystem outside of the realm of venture capital. For example, Walmart is preparing to launch its own cryptocurrency and non-fungible tokens, according to documents filed with the United States Patent and Trademark Office. A NFT marketplace for gamers, according to reports, is also being planned by GameStop Corporation by the end of the year. According to Bud White of Tassin Inc., this upward trend is a hint that the crypto complex is in the midst of a repricing phase rather than a freeze. Some doubts remain. "We are simply seeing more realistic pricing for what is currently being built," said White, chief product officer and co-founder of the software development company that builds open-source, blockchain-based software. "I do not believe we are entering a crypto winter because there is still increasing momentum on the build side. We are just seeing more realistic pricing of what is currently being built," White added. The looming potential of increased regulatory action only serves to increase the risks associated with the cryptocurrency complex. The Federal Reserve is pondering the introduction of its own digital currency, and the energy consumption of cryptocurrency mining has drawn the attention of both the United States Congress and international governments. A senior market analyst at Oanda Corporation stated that the White House is likely to unveil some national security challenges posed by cryptocurrencies, and that the Federal Reserve's paper on central bank digital currencies did not answer any questions on whether we will see a digital dollar or how they could work with stablecoins. The regulatory landscape has become far hazier currently. What are your thoughts about a crypto winter? Will the current market lead to a crypto winter? Please let us know in the comments sections down below. So, that's pretty much it for this video. Hope you liked this video? If so, then don't forget to subscribe to the channel and click the bell icon so you never miss any video. See you in the next video. Till then, take care. Thanks for watching.